Hi, this is Jim Welsh from macrotides.com. Thanks for tuning in. In recent videos, I've discussed how the strength of the dollar is a reflection of a global liquidity squeeze. It's going to be particularly harmful for emerging market economies. Here's why. Total dollar-denominated debt in emerging market economies has grown to $11.9 trillion. As foreign currencies decline, the burden of that debt increases, which makes it more difficult to service the debt and, of course, to pay it back. With the global economy weakening, that is only going to exacerbate that process. Let's look at where some of the stresses are showing up. Credit default spreads for emerging market corporate debt have spiked. But what's really concerning to me is look at this credit default spreads for sovereigns, which is countries. In other words, people are starting to worry about individual countries being able to maintain their and support their debt structure. So this is worrisome, and it brings back memories of the 1998 Asian credit crisis. So in coming months, as the global economy is weak, this stress is only going to build. But in the bond market, for emerging market bonds, it's already extraordinarily apparent. Based on the JP Morgan Emerging Market Bond ETF, those prices have dropped 27% in just 2 weeks, and well below any prior low that we've seen in the last 5-6 years. The same thing is apparent for emerging market local currency bonds. They've dropped 20% in the last 2 weeks. You'll notice over on the right-hand side, back on January 23rd, I suggested it was time to sell the EMLC ETF. At that point in time, it was trading at $33.90. Looking at emerging market stocks, as measured by the ETF EEM, we can also see that it has dropped significantly. Back in the February 2nd weekly technical review, when EEM was trading just below $43 a share, I laid out reasons why I thought it would fall below $32 a share in coming months based on the price pattern. Today, March 18th, it dropped to $30.15. The point here is that dollar strength is going to continue to press emerging market bonds and equities. And until we see weakness in the dollar start to come in, this global liquidity squeeze will continue and be a sign that the global economy remains under pressure. So one of the hopeful signs will be when we start to see the dollar begin to weaken. And that would imply then potentially an opportunity to buy emerging market debt as well as stocks. But until we see the dollar reverse, I think it's clear to stand aside and wait for that development. Thanks for listening. May something happen good for you today, and stay healthy and well. Thank you.